Hi, good morning. Welcome again to another edition of Market Analysis for today, December the 5th. I'm Giovanni Benacourt, analyst, trader, and educator with Advantage Markets. Well, let's take a peek ahead of to this week. But before we look at the trading a week ahead of us, we want to look at what the equities did last week and where they sit. So we're looking at the Dow Jones being up about 4 weeks in a row now, up a little bit more than 20% from the lows. It made that high last year, right about a month ago, on the 27th of December of 2021. It made a high of 36,829, and from there, it precipitated all the way down to 28,639 to be done on September. From this low, it has rallied right about 20%. Okay, and as you can see, the last 4 weeks, it has been trading higher. Could this momentum continue today, given the facts about the job numbers, inflation, and all of these things? That's what we're gonna be taking a look at what could happen. As far as for the Nasdaq, the Russell, and the S&P 500, they're all up 2 consecutive weeks now, with the S&P 500 right around 60% from its lows made on October. The high of it was 4,807, made the same day as the Dow on the 27th of December last year. And from there, it precipitated as well, all the way down to 3,500. And from here, it has rallied right about 16% from here. So will we see that continuation in the momentum into today, into this week? Well, that's what we're gonna be looking at. As far as for the Nasdaq made that high also. Actually on the 15th of November, and from there it traded lower all the way down to 10,000, almost 10,500, 10,484. From here, it has rallied right about 13% to the upside. Um, Looking at the chart, we see how I don't know if you can see the line, the 2 moving average, the 20 exponential moving average, acting as right now as kind of as a support. The RSI is neutral, so we could probably see a continuation of that rally in the Nasdaq. As far as the Russell goes, the Russell made that high on the 1st of November last year of 2,463, and it has dropped all the way down to 1,638, making that low again first on the 6th of June, and then again on the 3rd of October. And from this low, it has rallied right about 16%. The 50-day exponential moving average is acting as a resistance right now for the Russell, but obviously we have made a double bottom here, most likely that's a bottom per se, and this support seems to be rallying, seems to be holding off. So we could probably see the market just trying to find more footing and make another attempt taking out this previous high. So that could probably also happen. 2000, obviously, that's a psychological round number for it. So going into the week, what are we going to be looking at for this week? Well, two of the key themes last week are still the themes going to this week, and we're going to be looking at yields, the yield curve, as well as China. Is China making any progress on satisfying the protesters by coming out of zero COVID in any way, shape, or form? And it has. We have received news that the Chinese government is already allowing people to come out. They don't need to have a negative COVID test. That if you go and buy cold medicine, you don't have to give your information, things like that. So that's going to obviously help perhaps the markets. This announcement is going to likely affect the market. Okay, so we're going to be watching it all week, not just the equities, but also interest rates and commodities, specifically like copper and crude oil, which has been up. Um, we're also going to be looking at the yield curve, which didn't make any major shifts. The 2-year note and the 10-year note spread got more negative, 77 basis points. It was 74 at the end of the close of last week. The same thing for the 2-year note and the 30-year note. It was negative 68, is now negative 72. But the yield curve itself dropped dramatically across the curve. The 2-year down 13 basis points, the 5-year down 17 basis points, the 10-year down 16 basis points, and the 30-year down 17 basis points. Now, over the weekend, we had the OPEC meeting. If you recall, when the OPEC Plus, which consists of the OPEC and its allies, including Russia, decided to reduce output by 2 million barrels per day, or approximately 2% of global demand, from November through the end of 2023, it infuriated the United States and other Western countries. Now, the group of oil producers decided it's time to keep the policy unchanged. Its key ministers will next meet on February 1st for a monitoring committee, while full meeting is scheduled for June 3rd and 4th. Now, this comes as the group of seven places of a $60 a barrel price cap on Russian oil. It kicks in today, and the European Union bans most imports of Russian oil. But really, Russia is they're saying that they're already selling it around that amount anyhow, and they're not gonna continue selling their oil to Europe. So considering that the OPEC had already reduced its production to one of the lowest levels prior to the pandemic, we're gonna be watch for crude oil this week. Now we're gonna be given this light rebound. We had it in it up about $80, which makes it the typical price crude oil, and this can be used as a pivot point. Right now it's rallying. I'm looking at 83 and change to be a resistance level for crude oil. Let me take a look. Let's put up the up here. We have the chart of crude oil. So basically this is what I'm looking at, $80 being our support level. I have 83 psychological resistance right now. You see the RSI is already trading outside of the overbought levels. So it is being overbought. So we could probably have that if the momentum of it continues to be to the upside, $83 and change will be the resistance for right now for today. As far as Nat goes, well, we have finally traded towards the 550, which, if you remember, that level last week's had been a very, very important level, since market has fluctuated around that level quite a lot. So a 550, that will be a psychological support level, which really that's what the market is trading above that. But I'm using the low of October 24th as my support, and then I'm using $6, right around $6, round number, for it to be my resistance. It did open up with a gap down. We probably come and close that gap and then make another attempt at fluctuating below 550. That could be the case. So that will be to watch at, to look at. Now, as far as copper goes, well, copper did make a nice rally to the upside. It traded, the 20-day special moving average traded above the 50. Given that rally for copper, it's shy of $4. The resistance of it, and it traced. It just really retraced back down to the 50-day moving average, exponential moving average, which is a dynamic support level for it. I'm using 380 as my support for it. Okay, and then obviously we're gonna be taking a look if it does make another attempt on it, do a throwback towards the support, and then make another attempt to the $4. Let's see. As far as gold goes, 1800 is really the resistance level. 1780, I'm looking at it to be my support for it. Let's see what happens. As far as silver goes, yeah, silver has done a parabolic movement to the upside. The high of it of the 2nd of December is going to be my resistance, and I'm going to use that same low of the same day as my support. And I think that silver will trade in between these levels, just really looking to find some consolidation, ranging around the $23 level. As far as the euro goes, it has really been moving higher, trading above 105. It's fantastic. I'm using the 104 500 as my support, 106 500 as my resistance, and the fluctuation around the 105 500 will be seen. Pound is also looking to trade higher. 121 500 is my support, 124 is my resistance, and yeah, the 122 level, 122 500 is also obviously that's the pivot point where it could probably fluctuate around that. And as far as the dollar index goes, it has broken that 105 level, so psychological. So I'm using the 103 500, which it has been a support previously around June time. So we'll probably come down and revisit these lows. Okay, so that's it for me today. Have a fantastic week ahead, and I'll see you tomorrow.